Hello family, what's going on? This is Maniwa. Now before we go ahead and get started, make sure that you leave this video a like because every like helps this channel to grow. And ahead, hit that subscribe and notification bell so every like and subscribe really go a long way. So with that said, let's go ahead and get started. So today I will be focusing on the N5 student. So I'm going to focus on the branches as you can see, because in my last video I just taught you the basics. So now we're going to do the activity together, guys. Okay, I'm still dealing with the question paper for June. Yeah, this is the question paper for June, as you can see. So yeah, I'm still dealing with the same question paper. Okay, so the branches here, the branches. Okay, let's read. Best Bees of Centron has a branch in Benoni. The head office supplied all trading stock to the branch at selling price. You see, the method that we are using the selling price method. Remember in the last video I taught you on how to use the basics on how to use the selling price method. Cost price plus 60% markup and received regular summaries for the branch. Money received by the branch is deposited in the branch bank account and regular transfers are made to the head office bank account. We are going to draw up the following accounts in the books of the head office at the end of the financial period. 31st May 2014. We are going to prepare the branch stock, branch adjustment, goods to branch. Okay. Let me come here and throw some accounts that are required. Okay, first account, branch inventory, and this one will be the branch adjustment, and this one will be the inventory to branch or goods to branch. Okay, so let's go back to the question paper. Okay, so here's the additional information. Our information here is our additional information. Says use the following relevant information obtained from the summaries received from the branch. So we have the stock at the beginning of 2013. Remember, our year starts and on the 31st May 2014, so which means our year starts on the 1st of June 2013. So this one is the opening balance for the branch inventory because it's a stock, right? Okay, so let me start by renaming these accounts. So we're going to have the debit side, credit, debit, credit. So this account goes by the name of branch inventory. And this one, branch adjustment. So this one, the inventory to branch, or they call it the goods to branch. Okay, so let's go back to the stock on at the beginning of the year is 144,000. So this one is the opening stock. Remember the markup that we're using is 60%, right? Selling price method. So this is the branch opening balance inventory 144,000. So we come here and write the balance balance brought down 144,000. So remember, before we go any further, let's just take this amount and we multiply by the 60. We take this amount, we multiply by, remember, the selling, using the selling price, and the markup is 60%. 60% markup. So we're going to take this amount, 144,000, we're going to multiply it by 60 divided by 160 to get the balance brought down for branch adjustment. Balance brought down. So I repeat, is this amount 144,000 multiply by 60, multiply by 60, you divide by 160, because here we're only recording the gross profit, right? So this gives us 54,000. Okay, so let's go back to our additional information. So goods supplied by the head office at selling price. You see here we are receiving goods from the head office, 880,000, 880,000, and I tell you that the goods that were received, we record them here, but you don't record them as the goods received, right? We record them as what? Inventory to branch. To branch is 880,000. So without wasting any time, let's just come here and write the branch inventory with the same amount, 880,000. Remember, we're taking the name of the account, right? Okay, so let's go back to additional information. The goods returns to the head office at selling price. This time the goods were returned at selling price. Okay, the goods were returned at selling price 16,000. Remember, the returning of goods, we record them here as the inventory to branch. Inventory to branch, 16,000. 16,000. 16,000. Right, so comes here as what? The branch inventory, right? 16,000. 16,000. So the same goods that were received by the branch must be recorded this side as the branch inventory to branch. To branch, but here we are using the markup inventory. Here we're going to use the markup inventory to branch. We are going to use the markup, right? So we are going to take 880,000. We're going to multiply by 60. We're going to divide it by 160 to get the gross profit of 330,000. I repeat, 880,000 multiplied by 60 divided by 160 to get 330,000. Same applies to the goods that were returned. So it's 16,000 multiplied by 60 divided by 160, and you're going to have 6,000. So we name this the inventory to branch. So remember, we have taken the account of the inventory to branch under the branch